Hey guys, Justin here. I wanted to put together a video for you guys in an educational piece on how to tell when a stock is exhausted or about to reverse. If you guys do enjoy this video, if you could please give it a thumbs up and subscribe, it would be greatly appreciated. Thank you.
I really gotta hold on.
So getting things started, obviously, for a lot of people that are trading, the first thing that you want to do is tell when a stock is reversing, when it's exhausted, when you should be buying, when you should be selling, and really understanding the charts more. And this PowerPoint and this presentation is going to help you identify when a stock is potentially exhausted, when you can expect to see a reversal or a pullback, and really help you level up your trading so you can understand when you should be selling, when you should be buying, and so on and so forth. So when we go here, when we're getting things started, one of the easiest ways is to tell by volume exhaustion. And that's going to be the principle of what I'm sharing with you guys today, what I'm showing you guys. And really, I'll break it down into simpler terms here in a few minutes, but really volume tells a story, as does price action. And a lot of times this volume exhaustion marks a sign of a reversal or a pullback coming is because you're exhausting a lot of those orders. And when you exhaust a lot of those orders on one side, we are eliminating a lot of liquidity above that in this case, to the upside. So if you're exhausting all these buy orders here, how likely is it that you're going to continue to get so many buy orders to hold this price up? It's not very likely. So volume exhaustion a lot of times signals a pullback or a reversal coming. One thing I want to note too is when you combine this with a very quick tape and then a reversion lower, which I'll cover in the next slide, it can also increase your win rate and help you a ton in understanding what's happening behind the scenes versus what's just happening within the price action. Now, one thing I want to note is this works best in non-trending structure when it's ranging. So when you have a market that's moving sideways here and not forming a strong sequence of higher highs, higher lows, and continual trending structure, that's when this works best. One thing you have to note is if you are in a trending market or a trending structure, when you get a strong breakout on high volume, you oftentimes see a trend continuation. So the critical component here is you want to make sure you're not in a very strong trending structure, whether that be in the daily, whether that be in the 4-hour, hourly, 5-minute, whatever it may be. One thing I want to note is a lot of times I'll watch this on the 1-minute or 5-minute. It really depends on what you're comfortable with. It can be applied to any time frame. Depending on your swing trader, obviously you'll have different time frame than someone who is going to be a day trader. Now, the why. What about the volume exhaustion? Well, lots of times this is where institutions are switching sides. So coming from buyers to sellers, getting out of their position as retail buys up here, and then you get that reversion lower. Besides dark pools, institutions can't hide their activity on the market or volume. So when you get an influx in volume, increase in shares being traded, a lot of times it's institutions changing positions, whether it be selling, whether it be buying. And it really overall just is a sign of exhaustion. And what happens for the typical trader here, you get this strong breakout here, and this traps so many traders. Why does this trap so many traders? Because as you get a push down here, and as you start to sell off here, people who chase this breakout here end up getting trapped. And what happens when they get trapped? They bought, now they have to sell. This selling adds fuel to the fire as they get scared on this pullback, and it ends up adding fuel to the fire for that reversion lower after exhausting all of this volume right here. One thing you also want to note, and this is something from price action or volume price analysis, is an influx of volume should see an influx in price expansion. You get this influx in volume, but you want to see this expansion, which we got here, but then a continuation move here. Now, after this, the signs of weakness comes from what I mentioned earlier in that you're exhausting so many buy orders here on this breakout. It's very unlikely for this amount of volume to be sustained. Now, obviously, for example, if news comes out, if FOMC comes out, whatever it may be, that's a different story. But this is highly unsustainable price action movement here in something that is non-trending. Now, I touched on the tape, and the tape is going to be a critical component here. If we go back here, this tape is going to be from when we got this breakout here through 399.40 up into this 399.80 area. This can give you a direct insight into what is going on in the markets. Again, all candlesticks do are just simple price action, price movement. It doesn't tell you the full picture, whether there's a big seller, whether there's a big buyer, what's happening behind the scenes. Is it sellers stopping out? Is it buyers stepping up? The tape and order flow can help you with that. So a clear sign, for example, of sellers stopping out would be a very quick tape spray at a key region. So when we go back to this key region, you can see we sprayed in this 399.50 to 399.80 area, also up here into the 399.30s. So what makes sense? Why would this happen? Well, why would we spray in 399.30? Well, that marked the high of day. So one thing I want to touch on here is anything green. So green or dark green is at the ask or above the ask, and that's typically going to be buy orders. Now, when people see this, they automatically think, oh, well, it's people buying. Well, not necessarily. These spray orders here, what this is, these are short sellers getting trapped. They're closing their position, and when you're a short seller or selling, you have to buy back to close that position. What's significant about 399.30? Well, that was the high of day right here where we got this spray move higher here. So this movement here wasn't propelled by strong buying pressure. This movement was propelled by short stopping out, and thus increases your chances of having that pullback continuation. So they stopped out, they added fuel to the fire, and now this is so extended here, it's highly unlikely to continue this trending structure here. Once these stop orders clear, you can see the true liquidity above. So we see these stop orders here, and then we start seeing some red prints coming in, which are going to be at the bid or below the bid, which is oftentimes going to be selling pressure. This shows the true picture of what's going on, like I mentioned earlier, other than just simple price movement. It's also important because you can see where large players and institutions are interested in the name and what side they are playing. This right here is going to be filtered, so it picks up all quantities over 1,000. And why is that significant? Because if you're trading SPY 1,000 shares minimum, that's going to be 400,000. So that's not just your everyday retail trader making that trade. It's going to be what are the large players doing. You don't necessarily care about what someone's doing buying one share of SPY on Robinhood or one share of NVIDIA, whatever it may be. You care what the large players are doing. This filters that out and helps you get a true picture of what the large institutional players are doing. Now the thing is, so now that you understand the tape, now you understand the volume exhaustion, now where do I watch this? Well, this is going to be at key levels, whether it be a support resistance, a supply and demand. It could be a psych level, half dollar, whole dollar region, prior key level, a lot of times the high of day or low of day. You want to watch it at an area of interest where you know there'll be an increase in activity within the market. So if you're just trying to sit there and trade this at a random level during the day, like this point makes, it's very hard. You're going to get whipsawed, you're going to get thrown around, and you're going to find all these random inefficiencies in the market that end up just playing out or not playing out how you would like. So the levels are the most common ones that get shaken out the most. Like I mentioned, watching this at prior regions, the high of day, low of day, etc. Watch it at key regions. Don't just watch it in a random range and think that it's going to provide you insight. It's most helpful at key levels and at prior regions of interest. Now let's coordinate this with price action. And this is going to be a similar example here. This is going to be that example that I gave you on SPY. So if we go back here, and this was the exhaustion on the 1 minute chart. Now let's see what happens on the 5 minute chart. That mapped out the high of day here before a big move down. And why? Because this exhaustion is not sustainable. If you're in a strong trending structure where all the market is doing is moving from the bottom left and it's been trending all day long, you continue to get failed reversals, that's a different story. But if you have a range or consolidation market, this is extremely beneficial for you to understand. You want to see some sort of weakness on price action and that you don't want to see the candle have a complete bull body close. The typical retail trader, or many people, see a strong bull bar with a wick at the top and think this is strong when it truly isn't. So like I mentioned, when you're combining the tape, you understood that this movement wasn't propelled by buyers. This movement was propelled by shorts stopping out and adding fuel to the fire. There's a difference between people that are strong buyers or short sellers that are getting trapped and have to buy back their position. Now, when you look at this big bull body close here, the first thing everyone's going to be thinking is, wow, that's so strong, that's going to continue. But these moves are so exhausted. This big expansion is not sustainable. You have to train yourself to not just look at these big green and think buy. You see this big green and you think a lot of times this should be a spot of a potential pullback or a reversal coming, because you're exhausting so many orders. You exhausted all these orders here. Now what's left? You've already cleared all these buy orders. Could the buyers step in and continue to push this higher? They could, but it's more probable we see a pullback after exhausting so much volume. Again, like I told you, you have to understand trending versus non-trending structure. This is an example on 322. Why were we likely not to trend here? And this is just going to be from a macro construct picture. It was FOMC day. You don't typically see something that's trending into FOMC. It's not very common to see, and thus it adds the check to your favor that you're not likely to see a trending market. When you see this exhausted move, it's very unsustainable and not likely to hold. Another thing, the context of the market is huge, and you really have to understand, is something trending or is something not trending? That is going to help you immensely when you are trading. And the main reason is why? Well, high volume breakouts in trending structure and markets can be a sign of trend continuation. And let me show you an example of that. You see this high volume exhaustion here. What happens? It ends up being a continuation move. And why? This didn't have a construct of a weakness. It didn't have a construct of a ranging market. If you went to the hourly and the daily, we had a sequence of higher highs, higher lows, and we had an uptrending structure. So when you get these breakouts here, you should see a continuation move. And what's your added confirmation of a strong trend? When you get something like this that quote unquote looks like a strong reversal, and it immediately rejects or stuffs higher here, this traps all these counter trend traders, and this is oftentimes the sign of a strong trend continuation move here. So again, volume expansion in a trending market is completely different than a non-trending structure. So volume expansion in a trending structure leads to oftentimes a trend continuation. Volume expansion in a ranging market that's sideways often leads to a reversion lower. You must get a sense of the structure just to understand if it's trending or not. It helps you with playing sides. Trying to go with the trend is a lot easier than going against it. Now, you can make a killing going against the trend, but it's a lot easier to follow the trending structure. Why would you not want to fade the volume exhaustion? Like I mentioned, it's very strong trending structure here. We had a trending hourly, we had a trending daily. It's not ranging, and it's clear structure with pullbacks getting bought. So you can see pullback, bought, pullback, bought, pullback, bought, pullback, bought, and you get the picture here. Pullbacks being bought, low volume selling here, and then buyers step up to continue this trending structure here. In summary, it's a great way to spot reversals in ranging markets by identifying volume exhaustion and orders stopping out on the tape. So understanding the tape gives you an added insight into what's happening in the market. Is it strong buying, weak buying? Is it short sellers stopping out, and so on and so forth. It is critical to distinguish a trending market versus a non-trending market. It can provide you great edge understanding if we are in a trending structure or not trending structure, especially utilizing volume exhaustion. This can be applied to the 1 minute, 5 minute, 15 minute, and whatever time frame you use. If you're a swing trader and you want to use it on the 4 hour, the weekly, the daily, you can also apply it to that. You must use that to whatever time frame you plan on holding your trade and whatever time frame you're most comfortable with. Lastly, you want to see some sort of price action weakness. It's, again, like I showed you, just because you see a bull body and a wick does not mean it's very, very strong, especially in the context of volume exhaustion. That being said, that wraps up this video and this educational content. If you did enjoy this new educational content within our YouTube, let us know below and leave a comment on some things that you would like to see. I'm always interested in some videos to make for you guys and some things that could help you. Again, hope you guys enjoy and have a great day. Thank you.